Everyone thought GameStop was a mall dinosaur. Wall Street labeled it done. The headlines laughed. But the house everyone wrote off? It's quietly refitting its engine, moving into tech, stacking cash, and assembling a leadership team that knows how to build massive digital-first companies. If you don't see the upside here, you're not missing a fad. You're missing the biggest money-making opportunity in this decade. Let's start with the numbers, because numbers don't lie. GameStop's market capitalization sits at roughly $12 billion. That's the entire value the market places on this company. But there's a twist. On its balance sheet, GameStop is sitting on nearly $8.7 billion in cash equivalents, and marketable securities, and no debt. Add to that $500 million in Bitcoin, and suddenly you realize that almost 3/4 of the company's market cap is just cash and digital assets. Strip away the fortress-like balance sheet, and the market values the actual operating business, the stores, the e-commerce platform, the collectibles, and digital projects at barely $4 billion. To make it clear, after accounting for liabilities, the company has around $7.7 billion in net cash. That's about $17 per share in cash value alone. And yet the market only adds another $9 of value for the entire business itself. That disconnect is screaming opportunity. Of course, most people never get this far in the math. Why? Because GameStop is still stamped with the scarlet letter of meme stock. The 2021 rally put GameStop in the history books, but it also trapped the company in a caricature. Analysts, journalists, and even professional investors still roll their eyes and dismiss it as a retail sideshow. But labels are lazy, and they're blind people to change. The truth is, while the world was laughing at memes, GameStop was quietly rewriting its own playbook. That playbook begins with Ryan Cohen. Great investors don't invest in spreadsheets, they invest in people. Cohen built Chewy into a multi-billion-dollar e-commerce powerhouse before Amazon could crush it. Then he turned his attention to GameStop. He didn't just buy shares, he took the CEO seat. He didn't just cash in stock options. He doubled down with his own money. He didn't play tourist. He built a team. A team of killers, executives poached from Amazon, Chewy, and other digital-first giants. These aren't retail clerks trying to sell discs in a strip mall. These are operators, logistics experts, technologists. Cohen's message is simple. GameStop will no longer be a failing retailer. It will be a platform, a gateway, a digital hub for gamers worldwide. This isn't about nostalgia, it's about transformation led by people who already won this game before. Some skeptics say, okay, but what are they actually doing? The answer? Plenty. They've already tested a foray into Web3, launching a collectibles marketplace built to serve gamers and digital collectors. They've begun reshaping the balance sheet by deploying capital creatively. Bitcoin purchases, convertible notes, a clear willingness to experiment. They've rebuilt their logistics and digital experience with hires from Amazon, aiming to match the fulfillment and efficiency standards that dominate modern e-commerce. This is not a company clinging to shelves of dusty discs. This is a company laying bricks in the digital economy. Now let's circle back to valuation, because this is where the story gets outrageous. Imagine buying Amazon back when Wall Street dismissed it as a bookseller. That's the kind of disconnect we're looking at. 12 billion market cap, 8.7 billion in cash and securities. Do the division, you see $17 per share in raw cash value. The entire operating business, every store, every digital initiative, every potential platform is valued at just over $9 a share. $9 for the upside potential of becoming a digital hub for gamers, collectibles, and Web3 assets. It's absurd. The market is pricing GameStop as if nothing changes, when in reality everything is changing. And here's where people start whispering about the S&P 500. Imagine the day GameStop crosses the threshold and gets invited in. Every index fund, every retirement account, every passive ETF would be forced to buy GameStop shares. That's billions of dollars in automatic demand. Now let's be clear, GameStop isn't there yet. Market cap and profitability still need to step up. But with profitability trending better quarter after quarter and the balance sheet locked and loaded, this isn't a fantasy, it's a path. And when the path ends in the S&P, history tells us the inflows are tidal. Now let's talk about the other elephant in the room, the shorts. GameStop remains one of the most heavily shorted stocks in the market, with around 66 million shares sold short, about 16% of the float. That's a huge bet against this company. But here's the kicker. Retail investors and some market watchdogs argue that this doesn't even capture the full picture. SEC data shows persistent failure to deliver, and critics claim that naked short selling and synthetic shares have been used to suppress the stock price, claiming over 400% of the float. Let's be clear, these allegations are debated and not courtroom-proven facts, but the concern is real. The official numbers don't add up. And what we do know for certain is this: a large short base creates the potential for an explosive upside if sentiment flips. Wall Street has been caught off guard before, and retail traders haven't forgotten how that story ended. So where does it go from here? Watch the earnings. Profits are trending up. Watch for any regulatory tweaks around short selling and FTD reporting, because those shifts could change the playing field overnight. And of course, keep your eyes on Ryan Cohen's moves. When he buys more stock, that's not noise, that's signal. Everything we've covered so far is in the public numbers, the obvious, the stuff anyone can dig up if they're willing to put in the work. But here's the truth. The biggest money-making moves come before the headlines, not after. They come from the hidden catalysts. And that's exactly what I break down for my Patreon community. If you want access to see the rest of the video, where I cover the hidden catalysts that Wall Street doesn't want you to see, that's where you'll find it. If you're serious about staying ahead of the herd, you'll want to be inside that room. The bottom line is this: Wall Street still thinks GameStop is a relic, but the math says it's undervalued. The leadership says it's reborn, and the balance sheet says it's locked and loaded. Add in retail conviction, a massive short base, and even the possibility of S&P 500 inclusion, and what you have is not just a stock, you have a story. And here's the truth about stories in the markets. The biggest returns always come when the story changes. And GameStop isn't the punchline of a meme anymore. It's the setup for re-rating that could catch the entire financial system off guard. So next time someone laughs about GameStop, just smile. Because while they're busy mocking the past, you'll be watching the future unfold. This is not financial advice, it's financial awareness. And awareness is where wealth begins.